The first thing many traders are watching is whether buyers continue defending recent support zones. Every time price revisits these areas, the market reveals how much confidence still exists. Strong buying volume around support usually signals accumulation. Weak volume, on the other hand, can suggest that investors are losing conviction. Resistance levels are equally important. Previous highs often become psychological barriers because many investors who bought earlier may decide to sell once they break even. That's why resistance isn't just about technical analysis, it's about human behavior. Momentum has cooled compared to the most explosive phases, but that isn't necessarily bearish. Healthy markets rarely move straight upward forever. Sometimes momentum slowing simply means the market is deciding its next direction. Volume remains one of the biggest indicators to monitor. When price rises alongside increasing volume, confidence usually strengthens. But if price climbs while volume falls, traders often become cautious because fewer participants are supporting the move. Overall, market sentiment remains mixed. Some investors remain extremely optimistic because they believe meme coin activity isn't disappearing anytime soon. Others argue that speculative enthusiasm eventually fades, leaving many projects struggling to maintain relevance. Unlike traditional stocks, there are no official Wall Street analyst ratings such as strong buy or sell for pump. Instead, market participants rely heavily on technical analysis, blockchain data, trading activity, and community engagement. Based on those factors, overall technical sentiment has shifted between bullish and neutral depending on broader crypto market conditions rather than showing a consistently one-sided outlook. Have you ever noticed how the biggest opportunities in crypto often appear in the places that serious investors initially dismiss? That's exactly why Pump.fun has become one of the most talked about projects in the market. Some people see it as nothing more than a meme coin factory. Others believe it represents an entirely new business model that could reshape how tokens are launched on Solana. So, which side is actually right? Pump.fun, with its Pump token, has attracted enormous attention because it sits at the center of one of crypto's fastest growing ecosystems. Instead of being just another blockchain or another decentralized finance protocol, it's tied to a platform that made creating meme coins incredibly simple. Whether that's a good thing or a dangerous thing depends entirely on who you ask. The recent buzz isn't happening by accident either. Trading activity surrounding meme coins has increased dramatically whenever market sentiment improves, and every wave of speculation tends to bring more users back to pump.fun. Investors are asking one simple question: can the platform continue generating massive activity, or has it already reached its peak? If you're enjoying this analysis, don't forget to like the video, subscribe to the channel, and most importantly, leave a comment below because I'd love to hear your opinion. Now let's look beyond the headlines because the chart tells an interesting story. From a trend perspective, Pump has experienced periods of aggressive buying followed by equally aggressive profit taking. That's fairly typical for assets connected to speculative sectors like meme coins. Instead of moving in smooth trends, they often experience explosive rallies followed by sharp corrections before finding a new equilibrium. Of course, not everything looks perfect. One concern involves the sustainability of hype driven ecosystems. Platforms built around speculation often perform exceptionally well during bullish markets but can experience dramatic slowdowns during periods of fear. Another challenge comes from competition. Crypto evolves incredibly quickly. New launch platforms appear almost every month. If another protocol offers faster execution, lower costs, better incentives, or stronger security, users could migrate surprisingly fast. Then there's regulation. The crypto industry continues attracting attention from regulators worldwide. Any changes affecting token launches, meme coin trading, or decentralized platforms could influence user activity. Nobody knows exactly how regulations will evolve, but uncertainty alone can affect investor confidence. This creates an interesting debate. One group believes Pump.fun is significantly undervalued. Their argument begins with network effects. Let's talk about volatility because ignoring volatility in crypto is like ignoring weather before sailing across the ocean. Pump isn't designed for investors expecting perfectly stable price movements. Daily swings can be substantial. Weekly swings can become even larger. For experienced traders, volatility creates opportunity. For inexperienced investors, volatility often creates emotional decision making. Liquidity also deserves attention. During active market conditions, liquidity generally improves, making buying and selling easier. However, liquidity can change rapidly during periods of panic. That's why position sizing matters. Many retail investors make the mistake of allocating too much capital into one highly volatile asset. When price falls 20 or 30%, emotions take over. Instead of following their original investment plan, they panic sell near local bottoms. Ironically, experienced investors often do the opposite. They argue Pump.fun could eventually become a classic value trap. Their reasoning starts with one uncomfortable question: how much of today's activity represents genuine long term demand rather than temporary speculation? History shows that speculative markets can expand incredibly fast before contracting just as quickly. We've seen NFT marketplaces explode before cooling dramatically. We've seen DeFi protocols experience incredible growth before activity normalized. We've seen countless meme coins reach astronomical valuations before losing most of their attention. Skeptics wonder whether Pump.fun follows the same pattern. Another concern involves user behavior. Retail investors often chase excitement. Once excitement shifts elsewhere, liquidity sometimes follows. If trading activity slows significantly, platform revenues could decline alongside investor enthusiasm. Neither side has absolute certainty. That's exactly what makes this investment discussion so fascinating. Think about social media platforms. People don't necessarily join because the technology is revolutionary. They join because everyone else is already there. Supporters argue Pump.fun benefits from the same dynamic. As more creators launch projects there, more traders arrive. As more traders arrive, even more creators become interested. That positive feedback loop could continue expanding if market conditions remain favorable. They also point towards Solana's growing ecosystem. Faster transactions and relatively low fees have made Solana increasingly attractive for retail participants. If Solana continues growing, Pump.fun could potentially benefit simply by existing within that ecosystem. Then there's revenue generation. Many crypto projects promise future utility. Pump.fun already built an active platform generating significant user engagement. For bullish investors, existing adoption matters far more than theoretical roadmaps. But critics tell a completely different story. They prepare before volatility arrives. They decide how much risk they are willing to accept. They identify potential entry levels. They establish exit strategies. Then they simply follow their plan. Market psychology plays an enormous role here. When social media becomes overwhelmingly bullish, many newcomers feel they are missing out. Fear of missing out has probably cost crypto investors billions over the years. People buy after massive rallies because they assume prices will continue climbing forever. Then the inevitable correction begins. Suddenly, those same investors become convinced crypto is finished. The smartest participants usually avoid both emotional extremes. They remain optimistic during fear. They remain cautious during euphoria. Risk management separates surviving investors from those who disappear after one difficult cycle. That doesn't mean avoiding risk completely. Crypto itself is inherently risky. Instead, successful investors usually manage exposure carefully. They diversify, they avoid investing money they cannot afford to lose. They understand that no single project guarantees success. Now imagine the bullish scenario. Bitcoin continues strengthening, the broader crypto market enters another sustained expansion. Retail participation increases, Solana activity accelerates. Meme coin trading experiences another explosive cycle. Pump.fun continues attracting creators while maintaining its position as one of the leading launch platforms. Daily user activity rises, trading volume expands, revenue grows, investor confidence improves. Under those conditions, bullish sentiment could strengthen considerably because fundamental platform activity would support higher expectations. Now let's imagine the opposite. Crypto enters a prolonged correction. Speculative trading slows dramatically. Interest in meme coins fades. Competing launch platforms begin attracting creators away from Pump.fun. Regulatory uncertainty increases. Revenue declines. Market confidence weakens. Under that scenario, investors would likely reassess growth expectations. placing downward pressure on valuation. Notice something interesting? Neither scenario depends solely on Pump.fun itself. Broader crypto conditions matter enormously. Sometimes outstanding projects struggle during weak markets. Sometimes average projects perform surprisingly well during euphoric bull markets. Context matters. Looking toward the shorter term, traders will probably continue focusing on support levels, trading volume, and whether buyers maintain control after periods of profit taking. If momentum strengthens alongside increasing participation, confidence could improve quickly. If volume fades while price struggles beneath resistance, caution may remain appropriate. Longer term, the bigger question becomes much simpler. Can Pump.fun evolve beyond being viewed as just another meme coin platform? If it successfully expands its ecosystem, attracts lasting users, develops additional products, and remains relevant through multiple market cycles, today's valuation could eventually look very different. If not, investors may conclude that much of its success depended primarily on temporary speculation. That's why watching adoption metrics may become even more important than watching daily price candles. Price follows expectations. Sustainable expectations usually follow sustainable growth. Before making any investment decision, remember that excitement should never replace research. This video is for educational and informational purposes only and should not be considered financial advice. Always do your own research before making any investment decisions. The crypto market has a habit of rewarding patience while punishing emotional decisions. Sometimes the loudest headlines end up meaning very little, while the quiet developments happening behind the scenes become the real story months later. As Pump.fun continues writing its next chapter, every investor will have to decide whether they are looking at the beginning of something much larger or simply another cycle driven by speculation. So here's the question I want to leave you with. If you had to choose today, would you classify Pump as one of the most promising long-term opportunities on Solana? Or do you think history will remember it as one of crypto's biggest hype cycles? Let me know what you think in the comments.